Welcome to Simple Investing Secrets, your trusted source for valuable investment insights, stock recommendations, and strategies to help you achieve financial freedom. In today's video, we'll delve into the top 8 stocks to buy right now. Stay tuned until the end, because we have an exciting bonus tip on an emerging stock that has the potential to skyrocket in value, one that most investors haven't even heard about yet. But first, have you ever wondered which stocks could outperform giants like Google and Microsoft? Today, we'll reveal the hidden gems that could do just that. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. First on our list is an AI stock that's growing even faster than its competitors in one of the most significant investment trends of the next decade. Cybersecurity is CrowdStrike's bread and butter, with cloud security as a side. CrowdStrike, ticker CRWD, offers AI-powered cybersecurity and has built a unified platform designed to protect modern workloads in the age of AI. Traditional antivirus software looks at past attacks and compares new traffic to that list to keep out malicious entities. CrowdStrike, on the other hand, applies machine learning to previous hacks, allowing it to proactively identify threats that have never been seen before. As more people come online and the rate of novel attacks increases, the demand for CrowdStrike's protection is rising just as fast. CrowdStrike is highly rated by Gartner for endpoint protection platforms, cloud workload security, and vulnerability management platforms. Being a cloud-native company, CrowdStrike excels at protecting cloud workloads better than traditional legacy cybersecurity firms. The global cybersecurity market is expected to nearly double in size over the next 5 years, while the global cloud security market is projected to grow more than threefold with a compound annual growth rate of over 20% per year. CrowdStrike's revenue is approaching $1 billion per quarter, growing at 33% year over year for the last 3 quarters. This company has recently become net income positive, producing a ton of cash. As long as CrowdStrike continues executing its plan, it has a massive runway ahead. If you currently own 100 shares in this company, then your possible value is at approximately $385,000, nearly tripling your initial investment. But before we proceed, here's a fun question for you. What's your all-time favorite stock that you've invested in, and why? Let us know in the comments below. Next, let's talk about a stock that has outperformed Google, Microsoft, and Samsung combined since 2022. Meta Platforms, ticker Meta. Despite the memes around Mark Zuckerberg's investment in metaverse technologies, Meta has returned 450% since November 2022. Here are 3 opportunities for Meta to double its business in the next decade. First, Meta is a leader in generative AI, although it hasn't been as vocal about it as Google or Microsoft. Meta Assistant was built using Llama 3, an open-source version of ChatGPT, which Meta originally created. They also have models like MusicGen and tools for cybersecurity and coding. If Meta pivots to apply and sell these tools, it could significantly impact their business. Second, the metaverse. While it's not ready for prime time, investing in this technology now positions Meta well for the future. Jeff Bezos famously said that trillion-dollar businesses are built by creating the platform before the next trend hits. When the metaverse wave eventually arrives, Meta will be ready, rewarding early investors. Third, Meta's existing business. As internet content grows, screen time will continue to rise, whether on 2D screens or in virtual reality. Meta's AI tools have boosted video watch time by 25% on their platforms. Revenue growth has been consistent across all regions, and expenses as a percentage of revenue have been declining. Profits are going up, making Meta a strong hold, even if the metaverse doesn't pan out. Now let's move to a new AI stock. Palantir, ticker PLTR. Palantir could soon have a monopoly on AI for the government. Peter Thiel, one of the biggest investors in Palantir, believes that the ultimate goal of a company is to beat all competition in their space. Palantir applies its expertise in organizing data for secretive industries like banking and the CIA to make those businesses run more efficiently. Palantir has one of the highest security clearances available to civilian organizations, allowing it to work with the U.S. Department of Defense, the U.S. military, and the CIA. As more companies jump into the AI space, the government needs secure AI solutions, and Palantir is one of the few companies with the necessary security clearances. This advantage could lead to significant government contracts, potentially tripling their value. Next, let's highlight Oracle, ticker ORCL, a cloud provider creating new AI models that haven't yet skyrocketed in price. Oracle is the 3rd largest software company globally and a major cloud provider in the US. They offer industry-specific applications, particularly in retail, finance, and healthcare. making it easier for companies to run their businesses on Oracle's cloud. Oracle's AI services and models are integrated with their enterprise-level security, making them a trusted choice for many companies. Despite being valued at less than $400 billion, Oracle has significant growth potential compared to competitors like Google and Microsoft. Following on the next AI stock is Cloudflare, ticker NET. Cloudflare has a hand in almost every aspect of running an application on the cloud, from the network to creating VMs. Founded by Matthew Prince, Lee Holloway, and Michelle Zatlyn, Cloudflare started as a firewall for the web and has since expanded to optimize traffic for good actors. Cloudflare has been growing at a compound annual growth rate of 46% since 2018 and aims to 5 times its revenue over the next 5 years. Although not yet profitable in terms of net income, the company generates significant cash flow. Their recent product, Cloudflare Zero Trust, addresses the need for advanced cybersecurity in a cloud-native world. Now let's look at Broadcom, ticker AVGO, a company you likely own through an index fund. Broadcom is a major player in the NASDAQ, bigger than Amazon, ExxonMobil, Tesla, and JP Morgan. Initially a semiconductor company, Broadcom now owns the entire stack needed to develop and deploy applications. Broadcom provides high-performance switches, network interface cards, wireless networking solutions, and custom circuits for data centers. They've also acquired companies like VMware to help developers build applications that run on these data centers. Broadcom's software now makes up 42% of their revenue, while semiconductor solutions account for 58%. Despite not getting as much attention as NVIDIA, Broadcom is poised for significant growth. We don't yet own Broadcom, but it's on our watch list. Here's another quick question for you. If you could only invest in one sector for the next decade, which one would it be and why? Share your thoughts in the comments. Finally, let's discuss Zscaler, ticker ZS, a stock with the potential to become a multi-bagger. Zscaler leads in zero trust security, a crucial aspect of cybersecurity in a cloud-connected world. Unlike traditional networks with firewalls, zero trust security requires authentication for every interaction within the network. Zscaler is well positioned to incorporate new technology trends, such as AI, into their security solutions. The rise of agentic AI, which allows for more flexible and dynamic programming, will increase the need for robust security measures that Zscaler can provide. Currently valued at just over $25 billion, Zscaler has recently achieved net income profitability, while growing its revenue at 32% year-over-year. To wrap things up, let's turn to a stock that embodies the mantra of why get rich quick when you can get rich for sure. Apple, ticker AAPL, recently announced Apple Intelligence, an AI for their devices focusing on privacy. This AI integrates with OpenAI but runs directly on devices, ensuring user privacy. Compared to Microsoft's Recall, which takes screenshots of everything you're working on, Apple's approach is more privacy-centric. This could hint at future R&D development by Apple, potentially replacing OpenAI with their own models. Apple's focus on privacy and security gives them a competitive edge in the growing AI market. As more users become aware of privacy concerns, Apple's commitment to protecting user data could drive significant adoption of their AI products. Additionally, Apple's integration of AI into their ecosystem of devices creates a seamless experience for users, enhancing productivity and user satisfaction. Their approach to AI development emphasizes not just innovation, but also user trust and data security, which are becoming increasingly important in today's digital age. Now, as promised, here's our exciting bonus tip. Keep an eye on ARM Holdings. This company is making waves in the tech industry with its innovative approach to designing the ARM architecture, which is a set of instructions used by processors to execute software. ARM licenses this architecture to major chip manufacturers like Qualcomm, Samsung, and NVIDIA, and is known for its energy-efficient designs. With strong financials and a visionary leadership team, this stock has the potential to see massive growth in the near future. Don't miss out on this hidden gem that could be a game changer for your investment portfolio. Before we wrap up, let's take a closer look at this table highlighting our top 8 high-growth stocks. Each of these companies stands out in its respective industry with strong financials and growth potential. Starting with CrowdStrike, their AI-powered cybersecurity solutions have positioned them as a leader in the industry, boasting a revenue of $3.6 billion and an impressive 75.19% gross margin. Meta Platforms, despite some skepticism around their metaverse investments, has shown remarkable resilience and growth. With a market cap of $1.302 trillion and an 81.50% gross margin. Palantir Technologies is a unique player, with its focus on government contracts and data organization, generating $2.23 billion in revenue with an 81.16% gross margin. Oracle, a heavyweight in cloud services, shows a robust revenue stream of $52.96 billion and a 65.73% gross margin, making it a strong contender in the AI model space. Cloudflare, although not yet profitable, is growing rapidly in the cloud network sector, with a compound annual growth rate of 46% since 2018. Broadcom, known for its semiconductor and software solutions, combines solid revenue growth with a consistent 1.3% dividend yield, making it a stable investment option. Scalar leads in zero trust security, critical for modern cloud-connected environments, with a revenue of $1.62 billion and a 77.75% gross margin. Lastly, Apple continues to innovate with AI and privacy-focused technologies, boasting a staggering revenue of $383.28 billion and a 45.59% gross margin. Each of these stocks presents a unique opportunity for growth and stability, making them excellent additions to any diversified investment portfolio. Before we go, one last question. What's the most important factor you consider when choosing a stock to invest in? Drop your answer in the comments below. That's it for today's video. Thank you for watching Simple Investing Secrets. If you found this content valuable, please like the video and subscribe to our channel for more content. Remember, this video is for informational purposes only and is not financial advice. See you next time.